Hello and welcome to NASDAQ Investment. This analysis is for CME Group on NASDAQ as of 7th of August 2026 with a share price of $264. The full report is on donatian.ca. An elite, near-monopoly exchange fairly priced, a quality compounder to own on weakness, 200-day reclaim from a buy, not a chase here. Business quality scores 82. Once liquidity and open interest pool on one venue, traders cannot easily leave. The offsetting position, the margin efficiency, and the clearing all live there, a self-reinforcing network. That gives CME a near monopoly in its core rate and equity index complexes, roughly 65% operating margins and almost no capital spending, so nearly all the cash comes back to shareholders. It is valued like a quality compounder on earnings, not like a bank on book value. The catch is simple. Quality this obvious rarely stays cheap. For a capital-light exchange, the right lens is the price-to-earnings multiple, not book value. Tangible book is actually negative. On the disciplined anchor, a forward multiple near 20.4 times against a warranted 18.6 times reads 1.10 times. Fair. That is roughly 10% above the model's fair value, so there is no margin of safety, but it is not expensive either, and CME trades at a slight discount to exchange peers. The regular dividend of $1.30 a quarter was maintained. The raise came back in February, and a variable year-end special dividend takes the all-in cash return to about 4.3%. Timing scores 53. CME carved a V-low near $218 in late June and has recovered about 21%, reclaiming its 50-day. The daily frame has turned from a strong downtrend to recovering. But the breakout came on below-average volume. Price is still under a declining 200-day at $278.5, and the weekly frame is an outright downtrend. That is recovering, not confirmed. So no entry group is met, and the call is wait. A daily reclaim of the 200-day on volume, or a pullback into the mid-240s, would move timing to improving and flip the medium and long horizons from hold to buy. Now the other side of the ledger. Volume cyclical. Revenue falls when volatility and ADV fade. Rate cuts would trim float income on member collateral. FMX is attacking the Treasury futures margin offset moat. Base case is only more than 5%. Reward to risk is thin here. Now weigh the risk against the reward. The bull case is roughly 19% above today, the base case the most likely about 5%, and the bear case a fall of about 14%, so you are risking about 14 to make 19. So our call on CME Group, on NASDAQ, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donatian Investment at donatian.ca. The link to the full report is in the notes below. Have a great day.